Okay, thank you. Very good. We're kicking off Memorial Day weekend. Everybody knows that. Oh, I've got to. Where is that? Sorry about that. Okay, there we go. That should be fixed. And none of that. Sorry about that. Had a little reverb. Was watching the countdown on Twitter. Starting again, Memorial Day weekend. Everybody knows we're all going to be at the pool or the beach or someplace fun and warm tomorrow. But futures will be opening in just about 30 minutes, and let's get geared up. A lot of news over the weekend. Peace is breaking out everywhere. I saw crazy videos of Escalade motorcades rushing through DC to get back to super important meetings at the White House and all the buzz that goes with that. But let's hope it's right. Everyone, I think everyone would love this to be resolved peacefully and have things returning to normal. It's definitely much better for the economy and the stock market, even though we've been discounting peace in the Middle East for a few weeks now. I saw an interesting article, which I will add a link to in the room a little later, that said, looking at pre-market action, oil is down a lot, bonds were moving a lot. I didn't have any specifics there, and equities were up a little, saying that, suggesting that we'd already priced in a lot in terms of anticipating peace in the Middle East in equities, but not in oil and not in bonds. So we will see how that plays out after 6 o'clock, but let's get prepared. I'll highlight 7350. This is something we talked about last week when we were pulling back. We had this little pullback on Friday. Sorry, it's cold still here. Little pullback here on Friday, and then this was Monday. We came down and tested this 7350 almost to the penny, and tested it again on Monday or Tuesday, I guess, Friday. But anyway, we really confirmed that this is a significant level, and this now is I don't want to call it a line in the sand. It's way too small to be a line in the sand, but it's very important for support that's been tested. An equivalent level was tested in NQ and in RTY as well. This was the Friday. Where is the Friday? I can't look at here. The Friday pullback, we came down, and here's the 7350, which just came from here. I'm going to highlight something here on the right, the profile or the histogram, and how the volume absolutely disappears. This was the case all the way back here. You can see, just because there's been no volume down here, and how clear a demarcation line this is. And that's what I really stood out to me, and why I singled out 7350 as the bottom of this volume zone. It's not nearly as clear on NASDAQ. With the same chart here, you got the same level, it's the low here, but the volume doesn't disappear nearly as cleanly. And that's why I was a little not, this one isn't as clean or as clear, but it definitely held. And this, I think, speaks to the action of the market. First possible support, they bought them, and it took them right back to the highs. So, and excuse me, RTY as well. You can see we held this level. I don't have the short term, so I don't have the clean breakdown of the volume. But at the first excuse, we're buying. So I think that's important to note. And for everyone who's getting kind of bared up a week ago on Friday, said, hey, look, understood it. We've been straight up. Don't straight line a pullback like this. It's just, it's not. It's gonna happen. Wait until we get some kind of a break before we start shorting. I still think that is the right call. But now we just have the very, very clear line. This is what, 27,975, I think, off the top of my head. I have it in the text. 28,760. Okay, yeah, I have it in the text here. Very clear line. If we break and accept below that, that's going to be our first breakdown. Just consolidating, even if we continue to go sideways, which quite frankly is the baseline expectation, consolidating at the highs is always bullish, and it just will give us a clear line to where we start thinking about putting shorts on. I'm not thinking about putting shorts on yet again this weekend. Russell just mentioned dollar. You've seen this chart several times now if you've been in the room and been looking at the reports. We've got a pretty clean wedge that's formed in here. This resistance line just over 100 is very important, and this is coming up. We tested this once back in January, February. We're holding this wedge. When we break, I really expect it to continue following through whichever direction. My bias is down. This is a 15-year trend line that's in play, and it's a few months already. I'm not going to rush it, but when it breaks, and I have alarms on both of these lines, or alerts on both of these lines that'll let me know when it goes through, I will absolutely be paying attention. I think weak dollar plays really take off if we manage to break this, as I've said many times. We're going to spend a couple of minutes on this. Bonds, it happened a week ago. This week was relatively calm, but this action is starting to tell me to pay attention here. We're getting follow through lower, which we haven't gotten in over a year. This is the short-term chart, same exact chart, just the smaller time frame. As I said, we always had these very strong counter moves up until right about here in mid-April. That's a more sustained move down than we've seen in a while, with a smaller move up and then another sustained move down. Now we're getting another smaller move up. Let's see how this responds to this weekend. So bubbles, you're late. That's okay. Indy 500, good excuse. This is just rates. We're watching them as we pushed up here. And one of the things I wanted to highlight is the sensitivity of equities to rates right now. This is the end of the previous week when equity prices really pulled back. This is basically a single day. We had another push down, which kept. This is what took equities down to the lows, 73.50, and all we needed was just to take the pressure off. This is not a huge bounce. This is just a relief rally, and equities took right back up to the highs. If we get another push down, I really think that's going to hit equities. This is a bigger concern for me than oil or just about anything else right now, even though we're not technically broken yet. When this 108, it's just below 108 level breaks, then I think the market will really pay attention. This move, it was paying attention. If we break this and follow through, equities are going to really be paying close attention. Overall view, no desire to look for shorts. I'm leading with that and protecting profits, and don't fight. Don't fight this. Don't be out looking for, if the market's going for this. I've got too many people I've been in touch with who are like, I'm shorting this. The question is simply why? When the market is going like this, why are you shorting? Now, if we get some nice sideways consolidation, yeah, you can get some trading shorts. But I'm not looking to really position short the way a lot of people were thinking about, given what was going on globally. Just the chart was telling us something different, and I argue that they still are. Okay, a little rejection on Friday, tiny, nothing to be worried about. Same thing, NQ looks great. As long as we hold above this level, I'm not forcing shorts at all. This is something that was very helpful, and I just look at the market slightly differently. Russell 1000 value. Never really broke. Looks healthy. When we had this pullback, again, a week ago, this was that Friday, and some people were like, we're down 500 points in NQ. This says don't care. No break. We just barely touched this 21-day moving average and ripped to new highs. Russell 1000 growth, same thing. This looks healthy. As long as we're up here, I'm not worried. I'm not positioning for shorts. It's just too difficult to fight. Not going to fight that. China has been lagging. It's healthy, but it's just not leading. So I'm not worried about it. It's not sending out alarm bells or anything like that. But yeah, it's not where I want to be putting all my money right now. And you can see this came down, worse than the US and with none of the bounce. So this is lagging. EEM also has been discussed, heavy in South Korea and Taiwan, heavy in semiconductors. I don't think it's the most reflective picture of what's going on in emerging markets, and I talk about it as a weak dollar play. Clearly, it's just too levered to semis in Taiwan and South Korea, but it's also leading and doing really well. So this is an indicator of what's going on globally. Breadth. We talked about it. It did dip below this 50% line, which is notable. That's the phrase I used, given that we were 1 day or 2 days, as the case may be, removed from all-time highs. But it's still healthy. And I did see last week that the equal-weighted S&P 500 made a new high last week. That's another, and I would argue, more important measure of breadth than the number of stocks over the 200-day moving average. I think this is great. I think it's very useful. It's in the presentation for a reason. but there's nothing here that says, hey, be worried, be concerned about this. Highlighting this as a contrast to this chart from 2 weeks ago when I said, look, basically this top left corner, which is the largest cap companies in the index, and very tech centric, and this was all green and everything else was all red. And I was kind of highlighting like this is showing how narrow market can still make new highs. Well, this week we've got the exact opposite. Basically, essentially everything else is green except for these. That's great. That's rotation. We're just rotating from these leading to, okay, now the money's going elsewhere. And just 2 weeks removed, overall this is healthy. When we're correcting, we rotate away from the leaders, and okay, yeah, you need a little breather in Nvidia and Google and some of these techs. We still have plenty of leadership up here, but seeing this action in healthcare, seeing some of these other sectors, utilities, financials, let's highlight them, much more relevant, and consumer, I'm going to talk about in a couple of minutes. Kind of picking up the leadership role for following the big move in tech a couple of weeks ago. Overall is healthy. I like seeing that. Okay, here's pre-open oil. I saw indications of both WTI and Brent down around 8%. That was last night when the news headlines were just hitting in a very illiquid kind of, I don't even know the market really. So I'm not putting too much stock into it, but if the headlines are correct, we can expect this to pull in. How it acts and how it pulls in is really the tell for me. If we come into this roughly 90 level and hold, that still will look very bullish for oil. And there's a lot of expectation given how much rebuild and how much economic damage was done. We still could have an oil shortage for some time. And in terms of trading oil, this is the level for me to watch. 90 is the first support level. This zone has been very important, even though we've busted through it several times. And then down here, 76, a significant move down from the 96 where we are closed on Friday. Still could arguably bullish, but you have to tread carefully. You can't have a $20 range in crude and just be very cavalier about it. It's been moving around. I have not been trading it in several weeks since I got taken out of Brent. I don't know, probably a better part of a month ago. I like it longer term, but this is difficult to trade. And let's watch how it trades this week. I'm very curious to see. Same thing as I said with Brent just last week. I was making a point to say this looks great. Okay. This is an ETF, so it does not correspond to any spot price in the oil, so don't look for that. This is just a BNO ETF, but it's the only thing I could find that really reflected Brent well. This is what I'm looking for, kind of 47, 48 on the ETF. If we hold above here, even breaking this 50-day, I'll still be bullish, and we just need to do some time, and that'll be looking for it to go higher. Same thing with natural gas. I made a lot of noise about this being a change in character last week. Still the case. Let's see how this pulls in. It hasn't pulled in nearly as much. It hasn't had the range. There's the facility I think in Qatar that was taken out by the Iranians very early in the skirmish. That was, is it 17%? It's some very large percent of global LNG. And the U.S. is positioned to be a swing producer here. This is U.S. LNG pricing. Very curious to see how this plays out and how it reacts this week, but more importantly, longer term. Gold consolidating. Just watched a video about how moving away from the petrodollar, which is probably one of the Iranian agenda items, and that certainly the U.S. is not going to agree to, but could happen over time, and how that could be exceedingly bullish for gold. In that the only thing, I can't remember how it was phrased, but basically gold is the swing variable in terms of getting China to buy oil on without using dollars. I guess it's to transact in yuan, you need the gold, and that's what they'll buy. I can't remember exactly how it worked out. But something worth keeping an eye on. For now, we're just consolidating sideways. We have to break this down-sloping 50-day to get going back up. I do think that if we do break that is certainly a signal to be getting back bullish again. For now, I'm just watching the sideways action. Bitcoin, I came up with my little clever. What I'm really focused on is how much the volatility is, how diminished, and instead of going from 15,000 in 2023 to 125,000 in 2025, Lambo action. we've just been really calm on a relative basis over the past, basically since the first of the year, with everything we've got going on geopolitically and globally, and we've got this much range. Bitcoin, I think, is structurally changed until something changes fundamentally again. I expect a lot more action like this until someone can point to a reason to own Bitcoin over gold or silver or something like that. Energy equities looked really good this week. Again, just have talked about oil and the implications of peace breaking out in the Middle East. Let's see how these trade. Valero, I would expect to do well with refining if we can get some things loose. And that's just a proxy for refiners. The majors, overall sector, and the drillers, remains to be seen. Technology is still leadership, period. I keep this one in here for good reasons. Want to see it. Yes, thanks, Marlon. I'd love to get some questions. And I'll do good point, Bubbles. I will post them in the chat right after. I did send them out, but I don't think you're on my email distribution. So let me jump here. So technology still looks great, some up there. I want to talk about consumer for a moment. And I did just see we can pull this in. Let's talk. 1 second. Here's my charting software. There were a couple of reports of consumer companies that came out this week, and you can see the responses. And it was Ross Stores, a discounter that I think most people are familiar with. They came out and quoted, said that, they're amazed how the U.S. consumer is just absolutely rock solid. Their comps, I think, were something like 15% in the quarter on top of 5s from last year. You saw the reaction. There's been a lot of fears about the U.S. consumer. All of here, RETL is a levered ETF. And you can see how basically May 1st, it really rolled over and 8 down to 6 in a levered ETF. And there were a lot of fears. It was as low as it's been in some time, and we're really getting a bounce. So TJX reported, Target reported, and a lot of them were saying, hey, the U.S. consumer still looks good. It cost me $5.60 to put gas in my car the other day. I don't understand how that doesn't impact people adversely, but it isn't. So again, I'm a chartist. I default to the charts, and this to me has huge information. So don't shy away. Certainly don't short the U.S. consumer yet. This is all present and still doing well, and I wanted to highlight that. Healthcare looks good. Financials look good. Industrials look good when we look at the individual ETFs, and overall, the market looks good. Tech is still leadership. This is amazing to me. And small cap is still performing as well. There's room to go and still be in the channel. This, for me, is what I'm watching. I think this is the most important. You can see in 15 years, we've barely spent any time above this channel. And this was stimulus-fueled post-COVID trading. If we can do that on the ES again, I'm going to be feeling a little cautious. It's just getting toppy. But again, I will not fight it. Okay, Bubbles, see your address. I'm going to post the link in the chat very shortly for anyone who wants to see them. I would love to get some questions. I'll tell you guys in advance. I'm going to my distribution list, which some of you are on, will be getting a highlight and try and get a bunch of people to participate in the video next week. And hopefully we'll have not only Q&A, but a lot more investor participation. Several prop traders, several hedge fund guys, some retired PMs, some active PMs. We should have a really good crew. I just don't know if they'll say anything. They've been lurking in the room for several weeks. So happy to take any questions. Otherwise, we'll wrap it up. The Indy 500 is over. I don't know if we have an NBA game tonight. I don't think we do. And the Knicks are going to get just killed once they make it out to play somebody in the West, if anyone cares about my editorial comments on the NBA. Okay, wrapping it up. If I don't see any questions, we'll just call it right here. And thanks very much for tuning in on a Sunday before a day off. And good luck this week. We're going to need it. All right. Have a great week, guys.